And this is the channel where my face is a little bit too close to the screen. So I know what you're thinking. Ooh, look at that T-zone. Well, actually, what I'm trying to do is talk about a potential cheap value stock, and that is Berkshire Hathaway. So Berkshire Hathaway, under the ticker symbol BRK, both A and B, they have a couple different stock types. The Berkshire Hathaway A stock is close to $300,000, so we'll mostly focus on the Berkshire Hathaway B stock, which is a more reasonable price to talk about. But what this company is, if you're not already aware, because most people who do investing are already aware of this company, but if you aren't, you're kind of new to the investing game. Berkshire Hathaway is the company that Warren Buffett purchased and owns. He is probably the best investor over the last 70 plus years in the world. And you know, you could argue there's other people have been a little bit better over shorter periods of time, but for 70 plus years, he's probably the best investor on the planet. So what is this company? It was a textile company when Warren Buffett bought it. But since then, he's used the money for investing in stocks and equities, as well as purchasing other companies to bring into the name of Berkshire Hathaway. And so this company is now comprising of things like insurance companies, railways, Dairy Queen, furniture marts, Fruit of the Loom, like clothing manufacturing, just all sorts of things, picture framing companies, you name it. So that's basically, it has like an operation side built of all these different companies, and they're all kind of independent. They all have their own managers. Berkshire Hathaway just kind of doesn't really tell them what to do, but just kind of collects the profit, and might help them correct a situation if it's really bad, but usually doesn't do much. And then they also have a huge investing portfolio. I think last year it was estimated like over $170 million worth of stocks and equities. So, or 170 billion, I should say, which is huge. And so that's what this company does. There's a current transition. Warren Buffett is trying to transition this company from a very heavily equity investing company into more of an operations company. And so more and more he's been moving the company towards an operation base, and that has been a significant portion and is a significant portion of the company. So currently the Berkshire B stock is valued at $204.31. So that gives this company a PE ratio of 125.3, which if you know, PE ratios usually between like 18 and 22 are kind of normal. So when you have 125, this is very expensive. This is more expensive than maybe, I don't know, like Amazon or something. But it does have a forward PE ratio of 15.8 for an estimate. Now I think both of these numbers are probably not very intuitive, or maybe they're misleading, I should say. And so we'll kind of discuss that in a bit. Its price to book value is 1.4, which is very reasonable for this stock, very reasonable for most companies. Now, if it goes below, it probably won't go much below that because of the whole plan that Warren Buffett's company has. And then the dividend, they have no dividend. Warren Buffett doesn't like to pay out dividends because he thinks it can hurt the stock if they had to change the dividend, and he just prefer that people either sell the stock if they want the money at the time, or trust him to invest it in the best place possible. So, and then just whatever, you can sell it if you want a portion. If you don't, you just hang on to his stock for as long as you can. And then it has a 5-year growth rate for its intrinsic value at about minus 4.4%. But this is misleading, just like its PE ratios. And so it really, the whole reason behind this PE ratio and growth issue is the way that calculations have changed for earnings of companies. And back in like near the end of 2017, they planned on making changes to the way they do accounting. And the problem with this is companies like Berkshire Hathaway, who have a lot of stocks that they use to invest, or to grow their company, they're basically forced to include stock price loss. So if the stocks go down, then they have to include that as losses in their earnings. Even though they haven't sold the stocks, they still own the same portion of that company, and the companies may still be doing well. Because the stock price has dropped, that's considered as a loss. And so because they have, like $170 billion worth of stocks, it can fluctuate a lot. And Berkshire Hathaway, they even mentioned in the end of 2018, there were days where they were losing like $4 billion in a day. So it really impacts their earnings. And so I think if you just look at their underlying company, like the actual operations of the company, and you look at it from maybe like a very basic rate that they used to have for growth of their stocks, then I think you could be looking at a growth rate of over 13%. And also the PE ratio would be much lower, but it's not because of the way, a new accounting practices have changed. So the reason I think this is probably an interesting stock at the moment is the price to book ratio. So Warren Buffett used to buy, like Berkshire Hathaway used to buy its stock back when the price to book ratio went below 1.2. But recently they've gone away from that to a different valuation of intrinsic value, and their intrinsic value is obviously higher than the price to book. So you're looking at a downside risk of this stock. They have so much cash, I don't think it'll go much below what they think. So if 1.2 was the bottom and it's higher than that, then 1.4, 1.3 is probably the bottom. So you're looking at like maybe a 15, 10% at most downside, probably not even that bad. So very low downside risk to this company because it has so many companies all over the world and a very broad range of companies. It's kind of like a Dow Jones Industrial Index, like an index fund almost of the market, and so it's very likely to survive into the future. It's the whole market itself keeps growing, so it's unlikely to see this company as a real failure. It's not focused on one thing in particular. So it has very, very limited downside. And the other thing is, currently this company is valued, like I said, probably with just its operations and some very basic amount of stock price earnings. And so I think that's why it's at the like 204, maybe 206 kind of range. But I think it's when you have that kind of value, you're assuming that this is kind of an insurance company, and it is heavily insurance. But they're trying to. Warren Buffett's say he has like $122 billion in cash or something, and he is planning on using that to make an acquisition of a new company to bring into the fold. And so, if he buys a company that's going to change how this company is viewed from an insurance company to something else, I see this as a huge benefit for the premium that people would pay for the company. And usually insurance companies don't have much premium when people buy their stocks. So if he is able to bring in a company at a decent price that is much different than an insurance company, I could see the kind of intrinsic value or typical valuation of this stock changing dramatically, and usually for the upside, because a lot of companies aren't valued worse than insurance companies or maybe banks or something like that. There are a few industries that are, but maybe autos or something. But other than that, I don't think that's the case for a lot of companies. And so I see its stock price reflecting a very low endpoint of what you could value the company at, with a very low downside. So that's why I kind of think this is a very interesting stock. It could, I feel like it will very likely go up in the long run, and how much, it could go up a lot. So I think depending on how you evaluate this company, I think you could even easily argue that it's worth over $300 per share. But I don't know if people will go that high, because they might have this kind of mental roadblock because of how the insurance company is dominating their business. So so that's kind of the positive case scenario. And then the big downsides, I guess, for this one is that because of the way the earnings have been accounted for, and their recent issues with like stock drops and the Kraft Heinz, I see that this stock might kind of dwindle for a while. So the next like 3 to 6, well, 3 months maybe, or maybe 6 months, it would probably not do much. Is very likely. So it could go up right away, but it might not. People might be hesitant. And then the other factor that's been lingering on so many people's minds, I think, is how long can Warren Buffett and maybe his partner Charlie Munger survive? Mostly Warren Buffett, but if he's in his 80s, and so he could live, another, 10, 20 years maybe. But running the business and doing his investment magic, it's hard to imagine that he'll live and keep doing that for too much longer. And so that's why I think people are somewhat justified in thinking, okay, if he passes away, what's going to happen to the stock? And even though there's a minimal downside, I think it could stagnate for a long time, or maybe there would be so much selling pressure that it would drop. Maybe Berkshire couldn't pay to keep its stock price at a reasonable level. But I think that's very unlikely, and I think a lot of people kind of trust Warren Buffett's approach. And because he has transitioned the business towards an operating business, I see that as not that big of a deal. But I do see it as a worry in investors' minds, and so I see basically this stock potentially floundering for a bit. And at my last video, I mentioned that I should really approach stocks better for timing. So I do think this company is a hold right now, but very interesting at the current prices. And in the next 3 months or so, it could easily be a buy. So yeah, I'd love to know what you guys think. Do you think Berkshire Hathaway is very undervalued, or do you think it's fairly valued, or do you think Warren Buffett's old news and this company is going nowhere? Feel free to let me know in the comments. Otherwise, thanks for watching, and we'll talk to you in the next video.